A retired couple in Florida used their debit card at a gas station on a Tuesday afternoon. The pump placed a temporary hold of $175 on their checking account, even though they only pumped $42 in fuel. That hold pushed their available balance below zero. 3 hours later, an automatic payment for their electric bill came through, and their bank charged them a $35 overdraft fee. By the end of the day, a $42 tank of gas had cost them $77. And the bank did not call, did not warn them, did not reverse the charge. That $35 hit is not a rare event. It is one of the most common financial penalties in the American banking system, and it affects people on fixed incomes more than anyone else. But overdraft fees are only one part of this equation. When you add up what a debit card actually costs you compared to the alternative, the number is far larger than most people realize. And by the end of this, you're going to see exactly where that money goes, who is collecting it, and the one switch you can make that stops the bleeding permanently. The $35 fee that hits fixed incomes the hardest. Approximately 67% of the largest banks in the country charge an overdraft fee between $35 and $38 per occurrence. Not per day, per transaction. If 3 payments come through on the same afternoon and your balance dips below zero, that could be 3 separate fees totaling over $100 before you even check your account. In 2024, American consumers paid an estimated $12.1 billion in overdraft and insufficient funds fees combined. Roughly 11% of all checking account holders paid at least one overdraft fee that year. And the data consistently shows that a small percentage of account holders absorb the majority of these charges. 7% of accounts experienced 11 or more overdraft incidents in a single year. Here is why this disproportionately affects retirees. When you are living on a fixed monthly deposit from Social Security or a pension, your checking account balance follows a predictable cycle. It peaks on deposit day and declines steadily throughout the month. By the 3rd or 4th week, many accounts are operating near the floor. A single unexpected charge, pharmacy copay, an automatic subscription renewal, temporary hold from a gas station or hotel, can push the balance under zero and trigger a fee that equals nearly 2% of the average monthly Social Security check. Some banks have introduced small buffer zones of $25 to $50 before an overdraft fee kicks inches. Others have reduced fees to $10 or $15. But the majority of traditional banks, the ones that most seniors have used for decades, have not changed their structure. If you have not reviewed your bank's overdraft policy in the last 2 years, you may be operating under terms that were designed before any of these adjustments took place. And here is what most people do not realize. You can opt out of overdraft coverage on your debit card entirely. Under federal rules established by the Federal Reserve, your bank cannot charge you an overdraft fee on a one-time debit card purchase or ATM withdrawal unless you have specifically opted in to their overdraft program. If you never opted in, the transaction simply declines at the register. No fee, no penalty. If you did opt in, possibly years ago without fully understanding what it meant, you can call your bank today and opt out. That one phone call can eliminate the most common fee hitting your account. The ATM charge you are paying twice. If you use an ATM that is not owned by your bank, you are likely paying 2 separate fees. Your own bank charges you a fee for going out of network, typically between $2 and $3. The ATM operator charges you a second fee, often between $3 and $4. Combined, a single cash withdrawal at an out-of-network machine can cost you $5 to $7. For someone who withdraws cash 2 or 3 times a month from whatever machine is nearby, that adds up to $15 to $20 in fees every month. Over a year, that is nearly $240 spent on the privilege of accessing your own money. Most major banks maintain networks of thousands of fee-free ATMs. But many seniors use whichever machine is closest, often inside convenience stores, pharmacies, or shopping centers, without checking whether it belongs to their bank's network. Before your next withdrawal, check your bank's website or app for an ATM locator. Most will show you every fee-free machine within driving distance. If your bank has limited ATM coverage in your area, that alone may be a reason to consider switching to one with a broader network or one that reimburses out-of-network fees entirely. The money you are leaving behind every time you swipe. This is the cost that no one sees because it is not a charge. It is an absence. Every time you use a debit card for a purchase, you are choosing a payment method that returns nothing to you. Most credit cards offer between 1 and 5% cash back on every transaction. A debit card, in the vast majority of cases, offers 0. Let me put that in perspective. The average American household spends roughly $60,000 per year on goods and services. If even half of that spending goes through a credit card with a 2% cashback rate, that is $600 returned to you annually. On a debit card, that same spending returns nothing. Over 5 years, that gap is $3,000. Over 10 years, it is $6,000. It is not a fee you see on your statement. It is a reward you never collect. And for retirees managing a tight budget, $600 a year is not a rounding error. That is a month of groceries. That is a quarterly insurance premium. That is money that was available to you and went uncollected because of the card you chose to pull out of your wallet. Now, I understand the concern. Many seniors prefer debit cards specifically because they do not want to carry a credit card balance or deal with interest charges. That is a valid concern. But here is the distinction most people miss. You can use a credit card exactly the way you use a debit card. Spend only what you have. Pay the full statement balance every month. No interest is charged. The cash back is deposited into your account. And you never spend $1 more than you would have on the debit card. The difference is not in how much you spend. It is in what you get back. The fraud protection gap that could empty your account overnight. This is the section that should concern every person watching this who relies on a debit card for daily purchases. Under federal law, if someone steals your credit card number and makes unauthorized charges, your maximum liability is $50. Most major credit card companies go further and offer 0 liability, meaning you pay nothing regardless of how much the thief spends. With a debit card, the protections are significantly weaker. If you report the fraud within 48 hours of discovering it, your liability is capped at $50. If you report it after 48 hours but within 60 days, your liability jumps to $500. And if you do not report the fraud within 60 days, there is no cap. You can lose everything in the account. But here is the far more important difference, and it is the one that almost nobody explains. When a thief uses your credit card, they are spending the bank's money. The charge appears on your statement, but your checking account is untouched. You dispute the charge. The bank investigates, and the amount is removed. Your cash flow is never interrupted. When a thief uses your debit card, they are spending your money. The funds leave your checking account immediately. Your balance drops. Your rent check bounces. Your automatic payments fail. Overdraft fees start stacking. And while the bank investigates, which can take up to 10 business days and sometimes longer, you are living without that money. You may eventually get it back. But during the investigation period, your bills do not wait. For a retiree whose entire monthly income sits in one checking account, a single debit card breach can create a cascading financial crisis that takes weeks to untangle. A credit card breach, by contrast, leaves your bank account completely untouched from start to finish. the hidden holds that silently drain your available balance. When you use a debit card at a gas station, a hotel, or a car rental counter, the merchant places a temporary authorization hold on your account that is often much larger than the actual transaction. Gas stations commonly hold $100 to $175. Hotels may hold the full estimated stay plus an additional $50 to $250 for incidentals. Rental car companies can hold $200 to $500 beyond the rental cost. These holds are invisible on your balance unless you check your pending transactions. They do not appear as charges. They appear as reductions in your available funds. And while they typically release within 1 to 3 business days, during that window, your actual spending power is significantly lower than your account balance suggests. That gap is where overdraft fees live. Credit cards handle holds identically from the merchant's side, but the impact is entirely different. The hold is placed against your credit limit, not against the cash in your checking account. Your available balance at the bank does not move. Your bills continue to clear. Your direct deposits remain untouched. The one switch that stops all of this. Use your debit card for one purpose only: withdrawing cash from your own bank's ATM. For every other transaction, groceries, gas, pharmacy, online purchases, utilities, subscriptions, use a credit card and pay the full balance every month. You eliminate overdraft exposure on daily purchases. You eliminate ATM fees by only using in-network machines. You collect cash back on spending you were already going to do. You gain full fraud protection that keeps your checking account untouched during any dispute. And you remove the hold problem entirely. This is not about spending more. It is about choosing which piece of plastic you hand to the cashier. One of them costs you money every time you use it. The other one pays you back. The math is not complicated. The switch takes 5 minutes. And the savings start with the very next transaction.